Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance and show you the real story hidden in those dense filings. Today, we're diving into WEC Energy Group, Incorporated's latest update, and let's just say they're gearing up to sell some stock, and not in the usual way. Stick around because this one has some interesting twists. Before we dive in, if you get value from us decoding these complex documents, make sure you hit that subscribe button. And for a deeper dive into corporate strategy and to chat with us and other finance enthusiasts, join our Discord community linked in the description below. Alright, so what we have here is an 8K filing from WEC Energy Group Incorporated. This is essentially a report that companies have to file when something significant happens that shareholders should know about. In this case, the big news dropped on the 31st of October 2025. WEC Energy Group Incorporated, or WEC as we'll call them, has entered into a new agreement. This agreement is called an equity distribution agreement. Think of it like a deal where WEC Energy Group Incorporated can sell its own stock, its common stock, essentially shares in the company, to the public. But here is where it gets a little fancy. They're not just selling it directly. They've got a whole host of financial institutions like Barclays Capital Incorporated and Bofa Securities Incorporated acting as sales agents. And they can sell up to a whopping $3 billion worth of their stock. That is a massive amount of money they are looking to raise by selling pieces of the company. Now, these sales agents have a couple of roles. They can either act as an agent helping WEC sell the shares, or they can actually buy the shares from WEC themselves and then resell them. But the really interesting part kicks in when we talk about something called forward transactions. This is where things get a bit more sophisticated. In these forward transactions, WEC Energy Group Incorporated might enter into agreements where they essentially agree to sell shares in the future. Under one type of agreement called an initially priced forward sale agreement, WEC Energy Group Incorporated will agree to sell shares at a price that is determined based on the market price of their stock. But this price isn't fixed. It can change based on things like interest rates and expected dividends the company will pay out. The company will not initially receive any money when these shares are sold by the forward seller. Instead, they expect to get the cash later when the forwards are settled. This means WEC is essentially locking in a future sell price for their stock, even though they won't get the cash right away. Then there is another type of forward agreement called a collared forward sale agreement. This is even more complex. With these, the selling price is pretty much set within a range, sort of like a collar on a shirt. There is a floor price, meaning the lowest price they'll sell at, and a cap price, the highest price. The actual selling price within that range will depend on how the market performs during a specific period. The forward purchasers will actually borrow shares from stock lenders and sell them to hedge their positions. This means they are trying to manage their risk. The company will ultimately receive payment for these shares, but the amount can be adjusted and there are complex calculations involved. And get this, the collared forward purchaser or their partners might even be buying shares in the open market at the same time the forward seller is selling them. This is all part of managing their hedge. The company itself has the right to elect to receive the payment in the form of shares instead of cash, which is another layer of complexity. Now, there is a crucial point here. If the forward purchaser can't borrow the shares, or if the cost of borrowing them becomes too high, meaning it is equal to or greater than a specified amount, then the number of shares involved in that forward transaction can be reduced, possibly even to zero. This is a pretty important safeguard for the financial institutions involved. The sales agents are basically agreeing to use their best efforts to sell these shares, but it is not a guarantee. They have to use commercially reasonable efforts, which means they'll try, but they aren't obligated to sell every single share if market conditions aren't favorable or if there are other issues. The company has to meet certain conditions for these sales to even happen, and any sales can be stopped at any time. It is also important to note that only one sales agent or forward seller will be selling shares at any given time to avoid confusion and market disruption. WEC Energy Group Incorporated will be paying out commissions for these services, not exceeding 1.00% of the sales price. This means for every dollar of stock sold, they'll pay up to 1 cent in commission. For the forward transactions, this commission is essentially baked into the price, meaning the company receives a slightly lower price on settlement because the forward seller is getting that commission. All of these potential stock sales will be conducted under existing registration statements, specifically a Form S-3 filing. This means the shares WEC Energy Group Incorporated plans to sell have already been registered with the Securities and Exchange Commission, or SEC, making the process smoother. And as for the exhibits, well, they've provided the actual equity distribution agreement along with forms of the forward sale agreements. They've also included a legal opinion and consent from Joshua M. Erickson, and of course the interactive data file for the cover page. Now looking at this filing more broadly, WEC Energy Group Incorporated seems to be taking a proactive approach to managing its capital structure and potentially raising funds for future growth or projects. The decision to use a mix of direct sales and these more complex forward transactions suggests they are looking for flexibility and potentially to hedge against future stock price movements. The use of forward sale agreements, especially the collar transactions, indicates a strategy to secure a certain price range for their stock sales, even in a volatile market. This shows a level of sophistication in their financial planning. However, the reliance on these complex instruments also introduces potential risks. The company isn't receiving immediate proceeds from the shares sold in forward transactions, which could impact short-term cash flow. Also, the success of these transactions hinges on the ability of forward purchasers to borrow shares and execute sales, which is dependent on market conditions and the availability of stock. On the flip side, this strategy allows them to potentially benefit if their stock price rises within the collar, without the downside of a complete price drop if they had just sold directly without any pricing protection. Overall, WEC Energy Group Incorporated appears to be making strategic moves to strengthen its financial position and ensure it has access to capital. The complexity of the agreements highlights the evolving nature of corporate finance, where companies use sophisticated tools to navigate market uncertainties. While the details can be dizzying, the core strategy seems to be about securing funding and managing stock sales efficiently in a dynamic market. Alright, that is our breakdown of WEC Energy Group Incorporated's latest filing. What is your take on these forward transactions and what they signal for the company's future? Do you think this is a smart move? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribing ensures you don't miss our next deep dive into the corporate world. And remember to check out the Discord link in the description for more in-depth discussions. Thanks for watching. See you next time.